Hi and welcome back to this course on the usually. We are discussing about the rooms division revenue here. We have covered so far transient FIT revenue, group revenue, other contract revenue and other revenue. Few things that we need to talk about the revenue recording is that the revenue from the items which are like kept in the room or which are charged to the guest for, let's say, breakage or for taking away as a souvenir, those are not recorded as rooms operating revenue. Those are normally recorded in the appropriate section under maybe F&B or maybe retail or maybe any other section, or into the miscellaneous other miscellaneous income of the property of the things. So those things are separate, those are not recorded in the rooms direct revenue. Service charge, usually, which is a part of most of the hotels, where they are charging as per industry practices, which may be a 5% surcharge, 10% surcharge, a service charge, which is not discretionary for the guest to pay usually, and both IFRS requires that to be recorded as revenue included in the room's other revenue, which means it will be a forming a part of the ADR or the revenue calculations. While calculating the STR or while calculating the competitive rate revenues, service charge is, if it's not already added to the rates, it's normally added to the ADR, so that there is a comparison, there is a consistency in the comparison with from one property to another property. So service charge usually should be recorded as which is non-discretionary for the guest, and guest does not have a choice to pay but is forced to pay. That should be recorded as a revenue. However, if the guest is paying a tip to the front office staff or to the housekeeping staff or anything else, that is on discretionary by the guest, so that does not form part of revenue for the hotel, so it should not be recorded as a revenue. Other things that are considered in the rooms department is package revenue. Now, sometimes how does the hotel should be package should be allocating the packages? So what does usually say about it? Usually, for package revenue, usually normally is have a very clear understanding of how it should be described in packages. So usually normally when the hotel has is selling, let's say, a spa or a transportation included in the room price, normally they are selling those services separately as well, so there is normally a retail price. So what happens usually, if let's say the room is $100, spa is sold at $30 in a normal sequence, dinner is sold at, let's say, another $30 in a normal setting, so total price for all the three will be 160. The hotel can come up and say, okay, I am offering you for $120 all inclusive, right? So spa, dinner and room, total price, public price is $160, but it's offered at $120. So how the usually recommends to break it down? Usually and IFRS both follows similar concept. What they are saying is total discount should be allocated equally among the all the three revenue components. So if the $100 is the total discount is given as $20, $40, it should be allocated equally. So means $40 based on, sorry, not equally, based on the revenue allocation. So it should be prorated, right? 100 divided by 160 into $120, so which is the normal price. So room revenue should be getting its proportion of revenue. Normally hotels have package allocation, right? Sometimes can say, okay, my F&B spa is gonna sell me at $20, room is gonna F&B is gonna sell me at $10, so total is 130. I'm selling at 130, so $20 I allocate to the spa, $10 I allocate to room revenue, to the dinner. That's normally not considered as compliant with practices, usually practices, and also the new international financial reporting standards. we have to allocate the discount which is given for the room rate into equally into the same proportions, not the set prices. Then it will be considered as usually compliant. So you have to take care of that. The another aspect of the room revenue is barter transactions. Now, hotels sometimes sign up the barters, right? For example, with a travel agent for their brochure contribution, hotel can say, okay, I will give you 10 room nights for free in exchange of the normal cost. Since the travel agent has a usual contracted rate, so the cost is known and the barter contribution is known in that case. So you will be recording at normal price. But when there is no set contract into the room nights, how would you record the transaction? Let's say you are giving a new advertising in newspaper which normally cost $1,000, and in exchange of your that advertisement you are giving 5 room nights for free. So per room night usually you need to record $200 based on the total price that you are receiving. So you will be recording the public price of services that you are receiving as an expense. That same amount you will be recording as a revenue into your rooms revenue. However, you will record revenue only at actual use of the room nights, not when you sign the contract, because you have not actually used the room night yet. So it should be recorded at the value that you are receiving in pub and like arm's length price as a public, so that you are not recording it very low. Usually some hotels can say, oh, my room cost is only $20, so means my advertising cost is also $20. That's not the right way of recording it. You need to record it at the arm's length price. That's called barter agreement. Now the other part of it is, for example, loyalty programs. It works the same way. Sometimes properties may have loyalty program where you have redeemed certain points to get a free room night. That free room night, again, you need to record the revenue at the agreed price. You know, there normally a contract between the loyalty program provider and the property, so you will record at that particular value at which you have agreed in the property. But the value of points generated, let's say the if the guest is staying, if the one guest is staying in the property and he's paying $100, normally he get 2 points, right? Those 2 points you will not reduce from the revenue, you will record it as a marketing expense in your profit and loss statement in expense line, because you have to pay that to loyalty program provider. If you are managing the loyalty programs by yourself, you will need to use this money for redeeming the points, because the peoples will be redeeming the points, and you may have a team to manage this loyalty program. Their expenses will be coming out of this contribution. So the point value you will record an expense. Revenue you will revenue from redemption you will record at a pre-agreed price. Normally there is an agreement between the property and the loyalty program, so that you can record it properly. You will record room nights and the rates separately, right? So those are those are the few things that properties need to remember.